Hello and welcome to today's Stock Watch. So two companies I want to talk about today are Tesla and Netflix. So let's start off with Tesla, as the Silicon Valley car maker recorded its best ever quarter and its fifth straight quarter of profit as sales rose by over 40%. Not only are they trading over 5% pre-market today, but a spokesperson stated that it earned $331 million or 27 cents a share in the third quarter, compared with 16 cents a share in the same period 1 year ago. CEO Elon Musk has affirmed one Wall Street analyst as they have estimated in 2021 of sales between 840,000 to 1 million, as Musk responded by saying that sales will be likely in that vicinity and that analysts were not far off. So could this drive markets back up to record highs? Only time will tell. And Netflix is a bit of a role reversal, as they had a quarter to forget, as the stock price dropped more than 6% after the company missed estimates for the third quarter on subscriber numbers. The streaming giant earned $1.74 a share compared with the $2.14 expected. Subscriptions have waned slightly over the past few months, and this could affect their price tremendously going into 2021. Netflix added almost 26 billion subscriber numbers in the first half of the year, which was the strongest start to the year ever. Yet throughout the pandemic, the company has warned that these subscriber numbers would not last forever, and in fact that its surge in new customers could suppress growth in the future. Competition has intensified with streaming services over the past year, so it'd be interesting if this is a sign of things to come, with the world's largest streaming service maybe going into second position. So I want to take a look at Tesla first of all today. So we've mentioned it a few times in the past few months because of the continued ascension to record highs at the beginning of September. We've had the stock split, which has dented a bit of the stock price, but then it's picked up and recovered, and now we traded at just over $460. At the moment we're on 422, but we know that shares are trading higher pre-market, so upon market open we could see a bit of a gap on the upside. I've witnessed a slight bearish divergence on the momentum indicator, which could lead to a little bit more of a downside after this spike, but because prices are trading quite far away from the Ichimoku cloud and they're trading in between the conversion and baseline, we could see a breakout shortly. So I just want to bring it down on the 4-hour chart for a little bit of intraday perspective. And I just want to put a small Fibonacci on the recent lows to the highs in the past couple of months, just to see what the retracement potentials are. So at the moment, we're trading slightly above the top border of the cloud, which is a confluence of the 38.2, $415 approximately. There's a slight confluence line here, which I'm very interested in, because upon market open, we could see a bit of a jump upwards due to the recent positive news coming out of Tesla. So we could see a move up to the 435, possibly to the recent highs where we saw a little bit more resistance around this level here, which is 461. So as you can see, there's a level of confluence here that I want to see, and then there's this resistance line here that I want to see if it can pass. If it can pass these levels, there's no reason why we can't get back up to record highs. However, if we do see a bit of resistance at these levels, then I'll be looking at the 38.2, which is a $415, and then maybe perhaps down to $400, which would be around this area here as we finish off the rest of the week. So probably up until tomorrow, I'll see what the potentials are to put in a long or short position. So a quick look on Netflix now, and like I said earlier, it not only had a quarter to forget, it also had a trading day yesterday to forget as well. If we just zoom in on the points of interest here on the daily chart, we can see this gap of the opening of Tuesday's session to Wednesday's session, which is approximately $20, which is quite significant. I was looking earlier at this double top that it almost formed recently, but it has a long way to go now before it can get back to testing those levels. So what we're looking at mainly is the subscriber numbers going into Q4, how Netflix is going to deal with this. There's a lot of more competition now, so it could weigh heavy on the share price going forward. So I'm going to be looking basically at these levels here, probably the $460, $470 region. And if it can probably touch that, then it will move more away from the Ichimoku cloud, which would indicate further downside bias. And a quick look on the 4-hour chart. So I'm leaving the figures in for the daily chart. So what I'm seeing here is a slight bearish divergence on the momentum indicator, which was always signaling as some kind of downside bias, which we've seen here now. We've seen a bit of a choppy V section here. chances are that it will start pushing further downwards. So like I said before, be looking at the $466 area first of all to see if it can get down to there. It's not so far away. If you think that a $20 gap here is the equivalent of a $20 downside gap here as well. So it'll be interesting on the market open if we can get those levels, and if we can, then further downside should be prominent. So that's all for today from the Stock Watch. Thank you very much for joining me. If you have any comments, feel free to add them on the video and I'll get back to you as soon as possible. Thank you very much and have a great trading day ahead. Bye for now.